All right, welcome everyone. Thank you so much for joining the boot camp training this Saturday, 12 o'clock Eastern Standard Time. Normally do it around this time every Saturday. So you could definitely come to my channel. If you're watching this on YouTube, come to my channel during this time and watch the replay because I'm live right now, but I normally send it out to people that are part of my mentorship program. And if you want to be part of that, well, you actually get a link to the recording. Just reach out to me in the comments and say, hey, send me a copy of the recording. And it's also on my website. If you go to metrofxtraders.com, there's a link on my website where you can actually register for the upcoming Zoom trainings. That way I could send you a link when I do this live and you could be someone in the audience or, be someone who has questions and so on and so forth. So I have two screens up here on TradingView. So if you have this platform, you can literally put up two screens on your computer, which will help you analyze the market. So in order to get the two screens, there's a button on the right section of TradingView. Okay, you have to be a paid member in order to get two screens because free members can only do one screen like this. Okay, but if you click this button here, you'll see that you have an option to do two screens like that, and it splits it up and lets you look at two screens. Now, the two screen strategy is the one I use. Is real simple to follow. The first screen, pretty much you can put it on the 1 minute, and the second screen, you can put it on the 15 minute. Okay. After doing your top-down analysis from the 4 hour, we're going to go through those steps. I'm going to show you what to look for when you have these two screens. Because the goal of having the two screens is to actually measure the candles. Okay. Because the length of the candle will determine whether or not you should stay in the trade, right? That's the key. The minute time frame, the candles are developed every single minute. So you got a lot of volatility, a lot of things going on in the market that if you don't read the candles correctly, it'll either stop you out, it'll take you for a ride, and all of a sudden you're like, what's going on? But if you take a look at the 15-minute candle and you place your trades based on a 15-minute candle, for the duration of the candle, you can stay in that candle for 15 minutes. Okay, if you measure the candles by backtesting the candles, you measure the length of those candles, you can anticipate staying in a trade if you see a pattern happen. Okay, so if you see a bullish engulfing pattern, if you see a hangman happen, now these are terms and terminology you should already know from reading the Bible book, or listening to the audio version of that book, which is also on my YouTube channel. If you don't have a copy of the Bible, Candlestick Bible Training Book, reach out to me. I'll get your copy. It's a PDF in PDF format. That way you can read that at your leisure. But yeah, you got to know what those candles are. That way you can, when those candles develop on the chart, you can take advantage of that particular candle. And you can also take advantage of the pattern that candle will form and then be in that trade for the duration of that 15 minutes. All right, so let's do a breakdown of the 4 hour. Okay, you could even go higher than that. So let's do weekly. Let's start with the weekly. Okay, because the weekly candle is a whole week, right? So you can look at these candles and say, okay, what happened last week or the week before that? If you got 4 weeks, you got a month, right? So what happened during those candles, during the duration of a month, during the duration of 2 months, that will help you with your analysis, right? Is the market on an uptrend? Is the market on a downtrend? Or is the market consolidating? So those are the three questions you should ask yourself when analyzing the market. Am I going to be in for a buy? Am I going to be in for a sell? Or am I just going to wait it out? Because if it's in consolidation, you don't want to get into that trade unless you know what the top is and you know what the bottom is, and you place your trades based on the resistance and the support levels. So once it gets to resistance, you place a sell. Once it gets to support, you place a buy. You can do that strategy. All right. But looking at Bitcoin, we notice that Bitcoin, if you look at the whole, excuse me, Bitcoin journey, you'll notice that Bitcoin is pulling back, but yet the overall trend, right? If we pull out our tools here, let's see, tool, horizontal ray, and we also have the path, right? The path is a really good tool because you can break down the pattern or the trend based on making these rays, right? And what I'm doing is I'm placing higher highs and higher lows, okay? Which is giving me the direction of the market, okay? All right, so basically, let's see, if I take this tool here called the horizontal ray, I could try to make what we call stairs or ladders, whatever you call it. So let's take a look, let's do that real quick. Start at the bottom, we go to the top, and then that one already hit the bottom, so you got a lower high right there. And you have another top, and you have another bottom, another top, another bottom, another top, another bottom. So here it pulled back really, really low, but yet it pulled all the way back up. Okay, pulled back, and here we are, right? Now, another tool that I use is this little guy right here. And I place him on top of each steps, okay, like a ladder, right? Which is telling me that the market is trending higher, okay? Now, when you see that right there, you notice the market's trending higher. But when will the market retrace and pull back? Okay, we're gonna take a look at those levels as well. All right, so let's take a look at that. So if you look at the top here, you say to yourself, okay, the market did a really huge pullback right here. Okay. Typically, when the market pulls back, this is typically a reversal, right? Because if you look left, you look left, you look at the top of the market, you notice that in this area right here, okay, this area right here on the left side, if the market breaks this area right here, okay, this one here, we'll make it red. Okay, that market is changing. Excuse me. Okay, and when the structure of the market, right? Because the market has a structure. This whole structure was an uptrend structure. Okay, but you notice that when the market's consolidated right here, right, which was a sideways movement, this all right here was a sideways movement, right? This is all called consolidation. Consolidation. Okay, this is why I said that you don't want to be in this area, okay, because the market hasn't decided if it's going to continue its uptrend, okay, continue its uptrend, or reverse totally and give you a downtrend, okay. But what threshold here would give you an indication that the market's going to be trending lower? What's the lowest point on the left side that will give you a total reversal of the market? Typically, as you look at the last, black candle, okay, the last black candle, if the market breaks the last black candle, or the first candle you see on the left here, then it might be a market structure shift, right? So this particular candle right here, this candle right there, if the market breaks this, typically market structure, it's going to be a change of character, a change of structure, okay? Because it created this candle right here, okay? There's a very bullish candle on a downside, okay? And then you have a 1, 2, 3 candle, reversal, okay? Which means that if these candles right here don't break, all right, don't go up and break the high right here, it's a good chance that the market's going to trend lower, okay? I'll do one of these numbers because it didn't go up, right? And then you have a gravestone right here. This candle's a gravestone, okay? And typically, gravestone means market reversal. So, I'll do one of these numbers, right? This is just a prediction, is not a guarantee, okay? But yet, the last candle tells you that this last candle, okay, write it down in your notes, is called a gravestone, which means that it's going to trend lower based on this candle right here. So that's on a weekly, okay? Now, here. All right, so we notice that the market's trending up, right? Because all of this is an uptrend, right? Now, within these candles here on the weekly, is there a fair value gap? Okay, please look that up. You need to understand what a fair value gap is as well. Again, a fair value gap is 3 consecutive candles, right? 1, 2, 3, with a gap between them, okay? Meaning the wicks do not touch each other on the first candle and the third candle. So this candle didn't wick down to touch this candle's wick. So you have a gap right here. Okay. So that's one gap. So what happens is the market has to come back and fill the gap. All right. Typically 50% of the gap needs to be filled. As you can see with this candle right here, the market did fill the gap. Okay. Tried to bounce off the gap to trend higher to make a higher high. But for some reason or another, the sellers are stepping in, taking control of the market because the market's high at this level for the sellers because they got in up here. All the sellers got in at the top of the market. And what they're doing is selling the market down to make money. Okay. They're trying to cash in on this dip. All right. But yet, what happens is when the market fills a gap, okay, it tends to bounce off and trend higher to create a new higher high. But yet we have a candle that says, wait a minute, that might just not happen. So the candle will give you clues on what may or may not happen. So you got to pay close attention to this candle right here. And since we're at the end of the week, right, like Monday through Sunday, right, it's showing you that this candle right here may just, uh, you know, allow the market to trend lower. Okay, so that's one way of looking at it. Now, since you know this, right, the overall direction right here, from here to here, you put your trend line, okay, is a reversal, okay? Now, remember, we're in an uptrend because all of this is uptrend. If you stretch this all the way out, right, from, the bottom of the wicks here, that's what I normally do. I stretch it out, try to have the wick hit the bottom of my trend line. And I noticed that in this consolidation, that this black candle right here, because this candle was a tall tale sign right here. This is a hangman, okay? This candle meant reversal. The candle before it meant reversal, because this is a doji. So you had confluence on 3 different candles, 1, 2, 3, or 1, 2, so letting you know that, hey, if you were paying attention, these candles are telling you reversal. And what happens? That whole week, If you had gotten in this candle, right, from the beginning of that week, right, and rode it all the way down, you would be in profit and got out at that fair value gap down here. Okay. So the length of this candle, so I'm going to show you in the 15 minute, in the length of this candle, that's why I want you to take your measuring tool, which is over here. You put it on top of the candle, you stretch it all the way down to the bottom of the candle. Okay. And it tells you how long the candle is, right? Now this candle is like 14,000 pips. Okay. So yeah, you could have been on this ride all the way down if you held it for a week. Okay. If you held it for a week. Because this is considered a swing trader strategy. Okay. Swing trader strategy. But we're gonna go down to lower time frames and take a look to see where, you know, we could have gotten the market. Um, so we're gonna go down to the daily now. It's always good to do a top-down analysis. So you're gonna start with the weekly, put your trend lines, put your boxes where the consolidation is. Okay, because whenever you put a box, okay, and it breaks out of the box, it's got to come back and touch that box, and then you pay attention during your trend line that you drew on the weekly. That if it breaks the trend line, okay, it's going higher. If it, touches the trend line and bounces off it, it's going lower. That's exactly what happened right here. Exactly what happened right here. Okay, because there's a pattern that had developed on the daily. Okay, I don't know if you guys see this pattern. I'm going to draw it out for you. It's called the head and shoulders pattern, where it started here, left shoulder. You got your head right here. Okay, you got your head right here. You got your right shoulder, right? So that's a head and shoulders pattern. It doesn't have to be perfect, but it have to have a left shoulder, a head, which is a high, and then a right shoulder, which is a low. So when you see a head and shoulders pattern, okay, all you need to do is put a line, okay, which could be your horizontal line, put it on where the shoulder right here, the left shoulder, and the right shoulder, you put it like right below, like right around the neck area, which is right here, okay, and you just wait for the market to come back and try to touch that neck area, which is, as you can see over here in this candle, bigger. The market did come back, okay. I'll show you where this neck area is right there. Right, so you guys can see it. So this candle right here now, this candle right here, what happened? Head and shoulders, okay, it was already going down, right? Downtrend from the high, it came down. Okay, so what I always say when you're looking at a downtrend or a reversal, okay, and it's coming off consolidation, I just erased the box, but the red line is also the neckline. So when it's coming down like this, it's gotta, come down this area and then retrace, hit the area that it broke out of, and then pull back down that way. This is where you're into the trade, right here. Into the trade right here. And what is this candle right here? They would give you a tall tale sign that you should have entered the trade at that particular point. Well, it's this black candle right here. And of course, you already know the name of this candle because you read the book. This candle is a bearish engulfing candle. It is bigger than the previous candle before it. And this is where you place your trade. At the close of this candle, you're in this trade and you're writing it down because what are you doing? You're placing your stop loss above it. All right. And you're writing it down all the way down to these levels. You're taking out another tool which is your short position tool. You place it here. You have your stop loss here, and you stretch this out for 1 to 3. If you're going to be, looking for a profit of a 1 to 3, and hey, it hits your 1 to 3, and you made a profit because you have analyzed the charts based on what's going on with these patterns. 1 to 3. If you're a little bit more adventurous, you can stretch it out for a one to well, a 1 to 6, which is right here, or a 1 to 8.5 over here, and you would have been in profit this whole time. Okay. Now again, each one of these candles though are daily candles, so you have to be in this, this trade for a couple of days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days. Oh, right here. They hit it right here. Take that back. 1, 2, 3, 4, 5, 6, 7, 8 days. 8 days of profit. Okay. So, but I know a lot of my students are not day traders, they're not swing traders. They're pretty much, scalpers. So that's why you go down to lower time frames and you try to enter the trade based on a scalp, right? A 15-minute trade, a 5-minute trade, a 1-minute trade. You're in and out. So let's go down to lower time frames and take a look at what's going on. So now we analyze it from the weekly. We know what direction we're going. We charted up our charts. We anticipate a couple things happen. We notice that there's a gravestone on the weekly, which is, again, the gravestone told you throughout that week, starting at the beginning of last week, okay, or the beginning of this week, okay, that the market was going to trend and do all of this, activity based on that one candle on the weekly, okay, based on this one candle right there. It's incredible. And what the candle you see before it is a tweezer top. These two candles are exactly the same. But whenever you see a tweezer top, okay, and you see a tweezer top, and the one on the right side is black, okay, or it could be red on your chart. I'm gonna give you a secret. This candle, black, tweezer top, when it's on the right side and it's black, it's gonna go lower. If it was blue, and this candle before it was black, it's gonna go higher. The tweezer top tells you direction of the market as well. So it's another key thing to pay attention to, another key thing to put down on your notes, that when you see a tweezer top and the candle on the right is a colored candle for a downtrend, mine is black, it's going down. If the candle before it was black and this candle was blue, then it's going up. Okay. Okay. Is there a guarantee? No, but at least you know what you're looking for, right? At least you know. All right, so now I'm going to go down to the 1 hour. Okay, this is the 1 hour. Okay. And what do we see in the 1 hour? After placing all those lines, okay, after charting up everything, okay, this black line, which is our trend line going down, okay, you'll notice that same head and shoulders pattern that you put on your chart, and that same line that you put on your chart based on the weekly, okay, basically it never went past that line. Okay. So you could, got in a couple of trades, riding the market downward. Okay. Based on that line. Okay. Because this line is your uptrend line, this one right here, that you place on the weekly. Make it blue. That's your uptrend line, right? Meaning that if the market was, was above this line, it's trending higher. But the market's below the line, so it's trending lower. All right, so we're going to go down to the 15-minute now. Okay, go remember 15 minutes. How many 15 minutes equate an hour? How many 15 minutes equate a day? So all this stuff happened over here, right? You identified your head and shoulders on the weekly, and now you have to wait for all of this activity to happen. Okay. And based on what we did on the weekly, you'll notice that the market had hit it high. Okay. You could have put your resistance levels on the top and bounced off resistance, right? And it was trending lower, consolidated a few times, right? Right here, consolidated a few times, came out of consolidation, right here, came out of consolidation, right below your trend line, your blue line, right? Came out of consolidation, came back and retouched your blue line. All right. And this is the stuff you got to be patient, right? You got to be patient because if you were wanting to get into this market for a pullback or downtrend, you would have to wait for the retouch of the trend line that you placed here. Okay. So if you missed it going down over here out of the breakout, okay, you'd have to wait for it to pull back, get in right here, and try to ride the wave all the way lower because it's got to make lower lows, right? This is a low, a lower low, okay, and we're right here with the market right now. We'll go back to my opening statement. We're on the 15-minute, okay. We noticed that on the weekly, we saw a gravestone, okay. Now you'll also notice that the market will continue to make head and shoulder patterns because it's trending lower, right? So if you're looking at this chart on the 15-minute, can you identify a head and shoulders pattern inside of this chart? Okay, practice doing that, by back testing. Practice locating head and shoulder patterns. All right, I'll give you one right here. There's one right here. Shoulder, head, all the way down, right shoulder. There's another head and shoulders pattern, right? Head and shoulders, pull back to the neckline, and then you rotate it down, right? That's your head and shoulders pattern. All right, so you could have got in during the development of this right shoulder, but if you didn't get in and you missed it over here, all you have to do is wait for the pull back to touch the neckline right here. And what did I mention earlier? Class. I hope you guys are paying attention. What are these two candles? What are they called? Okay, I hear somebody say tweezer top. If you said tweezer top, you're correct. Same exact candles. What did I say before? That the candle on the outside of the tweezer top is the direction of where the candles go, which is black. Maybe on your chart is red. There you go. Once you saw that tweezer top, you said, okay, you're going to get into the market right here. At the close of the candle, you get in at the close of the candle. You got to wait for the candle to close because it doesn't close as a tweezer top, then it's not a tweezer top. You got to wait for the candle to close within that 15-minute duration, right? Right? This is where we'd enter right there at the close of that candle. Right, close the candle, enter here, rule of thumb, stop loss above, take out this tool, short tool, you got in here, you put it on your stop loss, and you stretch it out for this one could have been a 1 to 1.58 or a 1 to 3. I normally do a 1 to 3 or 1 to 3.5, okay? Or stretch it out even further for a 5.35 or anywhere in that area, a 1 to 5. So meaning if you place $100 trade and you held on for it to hit your take profit, which is down here, you're gonna make $500 off that trade. So 1 to 5. You're risking $100 to make $500. 1 to 5. You're risking $100 to make $300. Is a 1 to 3. Those are your ratios. Okay. So, but how do you know? You're asking yourself now, how do I pull this down to get a ratio? Well, you look left. Look left and see where the market hit more than once, right? Where it bounced off each other right here. So you could put your take profit right here, where the market pretty much created a support, right? Support over here. Okay, pull down, broke, support, trying to make a new resistance, but yet it couldn't, came back, hit support again. So when you see activity like this, you can look left and set your take profit levels. All right. You can do that, or you can pull it down here because it bounced off this line here as well. You could have stretched this out a little bit more for a 1 to 4.44. Excuse me. Okay, you could do that. All right, so now I'm going to erase everything and give you the split screen idea. This is a split screen idea. This screen will be 15 minutes. This screen will be 1 minute. Okay, because by measuring the candle, okay, and the market's trending lower, okay, it takes 15 1-minute candles to make a 15-minute candle, right? Okay. So if it takes 15 minutes to make if it takes 1 minute, 15 1-minute candles to make a 15-minute candle, right? That you measure the candles, right? You measure the candles based on the chart pattern, right? Because you had determined that there was a head and shoulders pattern, right? Which was right here. Shouldn't erase it, but I'll put it back. And remember, it doesn't have to be perfect. It just has to be on your chart. Here's your head and shoulders, right? Then you take another candle, vertical line, and you place it here. Okay, so April 4th, it gives you a timeline. April 4th, 21:15. So you look for April 4th. It's a Friday. Or you can do this, make it quicker. April 4th. Put your time. 21:15. right here. April 4th, 2115. So this in this area, right, is where you see the head and shoulders again on the 1 minute. Okay. So here's the head, here's a shoulder, here's another left shoulder. I'll draw it out. Let's see. Okay, make it bigger. Okay, so here you go. Put your line in your neckline. Just right here. Okay, and what do you see? Well, on the right shoulder, you see this candle right here. What is it called? Bearish engulfing candle. Shooting star has also been developed before it. Two candles telling you it's going to go lower. Okay, so you didn't get in over here because you had to wait for the close of the candle before you get in any trade. But then it retraced, hit the neckline, and then it gives you another opportunity to get in because you have another bearish engulfing candle right here. Wait for the close of this candle, and you would get in right there. And how many candles it takes to make a 15-minute candle? Because you're over here somewhere. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 15-minute candle, okay? 15-minute candle, so you're in the trade for 15 minutes. You're taking out your tool, your short tool, in the trade right there. You're stretching it out for you could do, what do we say, 1 to 3 is normally what I normally do, 1 to 3. Okay, your stop loss is up here for 1 to 3. Okay, or if you're doing counting 15 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, you would get out right here for 2.39. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You got out on the 12th, excuse me, 12th candle. Okay, which is nice. Still a profit because you did your top down analysis and you saw your head and shoulders pattern. You saw your bearish engulfing pattern happening. And you're saying, oh, it's trending lower. So before the market could trend higher, what do we see, right, on the weekly? On the weekly, I'll give you a secret. Before the market could trend higher, what does the market got to do? Well, it already did it, right? It's got to fill that gap, right? Got to fill the gap. So next week, you can close an eye on the market, okay? Because they might come back down and touch the gap again because it normally touches it twice, right? So you got to pay attention because that's why it's trending lower and giving you that was no longer a changing. Erase all of this. Remember, we saw a gravestone It was black. So what's happening here? It's changing colors. So beginning of next week, and this could be the start of a new week. Well, today's Saturday. We gotta wait one more day, right? One more day and 8 hours before a new week starts. It tells you that on the right side. And then we could see maybe the market trending higher, okay? Because this area is considered an order block, okay? And this candle is a Harmony candle, or a pregnant lady. Normally use that as a telltale sign that the market wants to trend higher. Because look what it did. It gave you this candle, trended up, retrace, trended up, pull back, okay? All right. But it didn't pull all the way back down, right? So it might just bounce off this area and try to make a higher high over here. Okay, so my prediction, just pay close attention when this candle closes. If it closes black, right, on the bottom, it's a gravestone. But if it closes blue, pay close attention to the candle because it's going to close in 1 day and 8 hours. So set your clock on your smartphone, on your alarm clock, to go off 1 day and 8 hours to see how this candle will close and then what the next candle will open. Okay. All right, so that pretty much concludes training for the day because a lot of great things are happening. Okay, I mean, Bitcoin is on a tear, hit an all-time high of $109,440.05. Okay, so mark your calendar, mark your chart accordingly, and then pay it closer to the top. Play it because if you guys are support and resistance traders, of course, you know to put your resistance on the top, and you know to put your support on the bottom. You go to the lowest point on the left side, then you put your support. Okay. All right, and then you look for your gaps. Like I said, the market's got to come back to fill these gaps. So there was a gap here, wick to wick, 3 candles, right? 1, 2, 3. Wick to wick, they didn't touch. There was a gap there. It came back and filled the gap, right? Gave you this candle right here, but yet it gave you a doji candle right after. Doji candle that comes after a down candle is a reversal candle, so that's why it trended higher. This candle is a doji candle, trended higher. Okay, but yet it gave you another gap right here. 3 candles, wick to wick, didn't touch. And if you're patient enough and you wait for these gaps to happen and get filled, and you set your an alarm, let's say right here, you go to Trading View and you click this button that says alarm and say, hey, send me an email or send me a text to let me know when the market gets to this level. And then you jump on the chart to see if it's going to go in your direction. And then you're in the trade, right, for a duration of a week. And that's how these guys are really making the big dollars because they're anticipating these, institutional candles being developed. Because let's face it, it's the banks that are causing these, bullish candles, these huge candles. The banks are getting in and creating a lot of momentum, and people are getting in because the banks are getting in, right? Because when a bank gets into the market, it pushes the market because they're going in with trillions, billions, millions of dollars. Us retail traders, we don't move the market. The banks move the market. And what you do is you follow, you get in the wave of the bank, okay, of the banks and the institutions and so on and so forth. And you can also say to yourself, okay, if I'm looking left, I could see another, you know, gap right here because those two wicks didn't touch on, on the separation of these three candles here. There's a small little wick here. All right. Right. Right here. This wick and this wick did not touch. Right. That's a gap. And again, the reason why there's gaps is because a lot of the orders were not filled. So the market's got to come back and get those orders because the market wants to make money, the market makers, that is. They need to come back and fill those orders. That's a lot of commission for them because, it was really bullish here. It raced really high, and a lot of people got left behind. But there's a lot of pending orders between these two candles. Okay, a lot of pending orders. That's why the market pulls back and fills the gap. Okay, so that they can get these pending orders and make their commission going forward. All right, that's why there's gaps in the market. So there's another gap here. And lo and behold, what did it do? It came back and filled the gap with this wick right here. Right? This wick right here. Right? Which is a shooting star going down. Look at it as a shooting star. Using a shooting star, it filled the gap, right? Pulled up, came back and filled the gap again. Right? And now it's bouncing off both of these gaps. Right? All right. Okay. So there you have it, a swing trader strategy versus a scalper. Again, if you go down to the 15 minutes, you're within that gap. Okay. Color coordinated and so on and so forth. You're within the gap. A lot of activities happening within the gap, right? Okay. But scalpers, we get in the market. I'm a scalper myself. We get in the market based on, 15-minute, 5-minute, and a 1 minute to get a quick profit. We don't want to be married to the stock or married to the trade or married to the pair. This is Bitcoin, married to the crypto, so to speak. Okay, because we don't, want to stay in the trade for a week or two. Although, if you're in the trade for about a week or two and your analysis is based on the higher time frames, and you just are patient enough to weather the storm and you stop losses pretty much away from your entry, then why not, right? You could put a small trade, and you said the most I'm willing to lose on this small trade is more than $10. It's more than $20. It's more than $100. Okay, because based on my analysis, if my $100 has a ratio of 1 to 3, I can come out of the, if it hits my take profit with $300. That's why it's important to understand those ratios. Okay, because yeah, you could make $15, $20, $30, $40, and have the same ratio because your lot size is small. Okay, if your lot size is small, you still do a 1 to 3. Okay, all right, $1 trade turns into $3 if it hits your take profit at a 1 to 3. Okay, well, think of it that way. Okay, so that's my top-down analysis. Okay, and you can rewind the video and say this to yourself. Okay, I'm going to use some of the strategies that I just learned today going forward. And if it works for you, let me know. I'm always on here, sharing and training and educating and letting you guys know that, hey, there's things in the market that you got to look out for. Things in the market you got to look out for, like, head and shoulder patterns. Okay. You got to look out for breakout patterns. Okay. When the market's in the consolidation, right? Market's in the consolidation, you wait for the breakout to happen, like right here. Whenever you see this consolidation, when the market's going, you can put your resistance level, support level, and it's bouncing up and down, right? It's not giving you, an indication of whether it's continue to go higher or whether or not it's going to go lower. But the minute it pulls out of the box, okay, you wait for the close of the candle that pulled out. You don't get in right here. Okay, you don't get in on that candle. All right. So put that on your trading plan that you do not enter the trade on this candle. Because this candle right here can pull back into the box and hit your stop loss. You wait for the close of this candle and you get in on this candle right here. Get in on this candle. All right. Now you might say to yourself, okay, I'll get in on that candle. But look what happened over here. It wicked all the way up here. But where did you put your stop loss? You put your stop loss above these candles here, right? And you did a stretch of a 1 to 3, 1 to 2, ratio. You got in on this candle, stop loss here is on the 1 minute chart. And you did a 1 to 5, 1.5 profit. Okay. Okay. This one has a smaller ratio. Keep that in mind. All right, because if you would have stayed in this market right here, trying to get a larger ratio, it would have been stopped out. Because look what it did over here. It stopped you out right here in this area. It hits your stop loss when it's above this red area. So be very strategic with your ratio. Determine how much you're willing to make on every trade. And that's what smart traders do. Try to determine how much you want to make on every trade. 2, a 1 to 1. Okay. But make sure you set that stop loss. Because you might say, okay, I'm in profit. Okay. So when you're in profit, move your stop loss to break even. Break even. That way it's a zero sum, game. You're not going to lose anything. You're not going to make anything. But you moved your stop loss to break even, and now you're waiting for it to, hit your take profit. Okay, over here in this area. Okay. And now some people, once they're in profit, they'll even move it even a little bit more, try to, like right here, to secure some profit. And if it goes against you, at least you were able to profit all of this right here. Because if it came back and touched your line, you at least made some money. It's another strategy for you. So you learned a lot today. So I'm not going to give you information overload. We'll conclude my trading for this week. And we'll go over information next week. We'll go over some patterns next week because the candles do create patterns. And then once you know what those patterns are, you need to know when to enter the trade, when the pattern, develops, and when the candle closes. Always enter the trade when the clock hits 0. on the right side. Okay. Don't enter the trade if it's a 15-minute candle, right? Don't enter the trade when it says 10 minutes. Because it's still got 5 more minutes to close. Don't enter the, if it's a minute candle, wait for it to go down to zero. Wait for the candle the clock to reset itself. Okay. That's important because anything could happen within that 1 minute. Anything could happen within that 15 minutes. You might think, oh, I'll get in, I'll jump in. What you don't want to do is jump in any trade. You want to have some sort of strategic analysis based on the candle you see in front of you. And then hold on to that candle, hold on to that trade for 15 minutes. You enter in the 1 minute, but you got to hold on to it for 15 in order to see a nice profit. Or, if you get in the candle at the 15 minute, right, based on your analysis on the 1 hour, hold on to that candle for 1 hour. Okay. Set it and forget it. Set your TP, set your ratio, and then set your clock for 60 minutes, 1 hour, to see if it'll hit your take profit. See if it'll hit your stop loss. Right? Simple as that. All right, y'all. Thanks so much for watching this video. Okay, share it with your friends. I'm going to stop the recording and I'll still chat with those who are attending the live event. So see you all next week. Thanks for watching.